is important. Thank you, Visa. To answer your question, please do not open the provision document. I would rather suggest to open the questions and solve the questions. While solving the question, wherever you are having a point, search for that point in the provision document. Go by question by question, not provision by provision, because many of the provisions are actually not relevant for us. It's too much. It's too much detail that we need not know to solve a question. So but specific which provisions and all, if I start telling that, then it would take a lot of time. So number two, what you can do is, in the meantime, you can go through the previous videos and practice questions from salary and house property, which we have already covered. He has mentioned that few questions can be from that, so that is there. And general provisions like agricultural income, residential status, and all that we have already covered. If we get time, I'll revise that. I'll try to pitch in some time for revising the concepts that we had already covered before the midsem, but depending on time available to us.
What about the theory part?
Theory part, so see, questions can be there from anything. He had mentioned, I remember in one of the classes, that students will have both the options. They can attend theory, they can attend the numerical. His recommendation was to attend the numerical ones. So I believe if we focus on the numericals, we don't have to attend any theory. But in case theory questions are there mandatorily, which we have to attend, it can be from anything, to be honest. Theory, like if you remember in the midsem, the question was from the calculation of GAV, gross annual value. How do we calculate like that? Sorry, net annual value. So he had asked us for that table thing. So theory question can be from anything, to be honest. So just focus on the provisions whichever we are discussing. That on that provision itself, the question can be.
Okay.
Yeah. But theory, we can't really guess. We can't really say, 10 questions you take, out of these 10 only questions will be there. No, we can't say that, because in tax there are so many things that question can be from any corner. So better to focus on the numerical parts. Yeah, let me share my screen. Give me 1 second. You guys can see my screen, right?
Yeah, Dheeraj is visible.
Yeah, thank you. So we are talking about the profits and gains from business and profession head. In generic, whenever a business is there, income is earned by the business. There are some expenses that are incurred by the business, and it has to pay some tax. How do we calculate for tax for that scenario, that particular scenario? Business can be a company's business, business can be a individual's business, business can be a partnership's business, business can be a firm's business. All the businesses we are covering here. Now, let's talk about one of the components of the PGBP. When I say PGBP, I mean profits and gains from business and profession. That is depreciation. Calculation of depreciation is slightly tricky when we are talking about PGBP, which is why there will definitely be a question from depreciation calculation. So now depreciation calculation is exactly almost similar as we have discussed in accounts in the first semester. Slightly different things are there here. So let's talk about those extra stuff or different stuff that is there in income tax. Now in income tax, what happens is, what they say, the major difference is they don't allow you to take percentage as per your expectation. Suppose you feel that my asset is getting the wear and tear is happening to my asset very rapidly, so I'll depreciate it in 50% or 60% rate. No, they don't say that. They give you the exact percentage which you have to use in order to calculate the depreciation. Now, what are those percentages? We will discuss quickly. Before that, the another thing that I wanted to talk about very quickly was um, depreciation can be on a multiple number of assets. Just wherever you are sitting, if you look at it, you must be having a TV in front of you, laptop in front of you, some other furnitures. Now, and everything can be categorized as its individual nature. As per its individual nature, it can be categorized as a separate asset, and the separate percentage can be determined. I'll say, what, TV will be there for 10 years, so I'll charge only 10%. Furniture will be there for suppose 20 years, I'll charge 5% depreciation on that. Suppose I have some computer won't be there for, suppose it will be there for 2-3 years, so I'll charge some 50%, 60% depreciation on that. So if we go on like this, imagine a big company, talking about companies like Amazon, Flipkart, Uber, or companies like that. How many number of assets will be there? Unnecessary calculations will be happening, which is why what income tax department has done is they have said, what, you categorize your asset into 4 categories. You categorize your assets into 4 categories. One is building, one is furniture, one is intangible asset, one is plant and machinery. Building, furniture, intangible asset, plant and machinery. We will categorize the assets into these 4 categories, nothing other than that. No, any asset, anything you drag and drop anywhere. So not anywhere, I mean, depending on its nature and all. So depending on the category, you will have some percentages fixed, and accordingly we'll calculate. Now, let's talk about the percentages very quickly. Now, building mostly will be 10% interest rate. Furniture will be same as building, that is 10% interest rate. Intangible assets, 25% all the time. Plant and machinery, there can be multiple number of categories in it. Suppose you have a computer, 40% interest rate, books, 40%. Anything other than these, it will be 15% in plant and machinery. Now, what happens is, suppose in income tax, actually, there are a lot of other subcategories mentioned under buildings, under furniture, intangible assets. In fact, if you open search note, there are actually 10-15 rates given. I have actually used only those which are mostly there in the questions. So let's remember only these six. These six will suffice for our exams, as per my expectation. Now let's talk about one more concept. Okay, before I go on about the next aspect, any questions up until now? Okay. Now let's talk about one more thing that is called block of assets. Now, what is this block of assets? So block of assets is where you have the same head. What did I say? It is having the same head and the same rate of depreciation also. What do I mean by that? Suppose your company or your business has one factory building, one office building. Yes. Now, factory building will have its own depreciation. Office building will have its own depreciation. Both will be falling under building head. So both will form one block of assets. What is its relevance? We will see just by solving the question that we have. We will solve the question when solving only we'll get to know what is the relevance of the block of assets. Now, so what happens is, as I said, two conditions. One is the type of the asset and another one is rate of depreciation. If both are same, then only it will form one block of assets. So if you notice, there can be in front of us, whatever the assets are there can be one block which is buildings and 10% interest rate, another block furniture 10%, intangible assets 25%, 3 blocks now. Plant and machinery, we can have computers and books together. Those are plant and machinery only, and it is 40% interest rate. Those will be one block. Other plant and machinery, it will be 15%, another block. So there will be mostly 5 blocks as per the rates that we have taken. Now, let's not think about it much. Let's take a simple example to understand the block before we go to the question. Suppose we have one asset. Suppose we have one machinery, which is having a cost of, suppose, 10,000. In the beginning of the year, we have machinery, let's say machinery one, we have 10,000 rupees. Suppose we have machinery two, cost of it is, suppose, 20,000. Now, suppose what we did was, in between the year, we sold machine two. We sold machine two. For how much? Suppose we sold it for 15,000. Now, tell me something. Does this impact depreciation?
6 months depreciation will be there, right?
Can you repeat that? I'm sorry.
6 months depreciation.
Okay. Yes. Logic is fine, but I'll just give one information little later after I get the answers from all. Give me some time. Anybody else? Yeah.
If it is used, then depreciation should apply, right?
So what are you talking about? In what it should be applied?
No idea.
Okay, no problem. Anybody else?
15% depreciation will be there because it's other plant and machinery, right?
So 15% on what?
On that machinery too.
On which amount? 20,000, 15,000?
The sale value?
Will be on the sale value, like 15,000, because
15,000. Okay. All right.
that is the purchase value. 20,000 is the purchase value, right? So
no. So
after
all
that,
the answers are no problem. So all the answers that I've got are actually wrong. I'll tell you the one thing, that additional information that I need to give is this, which I haven't told yet. In accounts, what happens is, suppose you purchased an asset, in between the year, you sold an asset. We calculate depreciation for the number of days or number of months we held the asset for this year. We deduct that depreciation from the cost, then we calculate profit or loss on the sale, isn't it? Does everybody agree with it, whatever I just said?
yeah, I agree.
I'll just repeat that for anybody who didn't pay attention to the first time. If you remember, in the first semester, when we are selling the asset, when we were selling the asset in between the year, for whatever number of months we held the asset, we were calculating partial depreciation, deducting that partial depreciation from the cost of the asset, so that we can calculate actual profit or loss on sale of the asset. Now, here in income tax, they have made it very simple. What they have said is, we do not need to do that. Even if you sell an asset in between the year, we will assume that you have sold it in the beginning only. No need of charging depreciation. Make sense? I'll repeat that.
So you mean to say it's waived off? You mean to say the depreciation is waived off?
You can say that. You can use that for sure. So what I'm saying is, in income tax, they have made it very simple. What they have said is, you don't need to touch depreciation at all. If you have sold a machinery, you don't have to touch depreciation at all. Assume that you have sold it in the beginning of the year only. Make sense? Any questions on that? Now, if that is the case, tell me, what is the amount of machinery that we have for this year? Suppose this is assessment year 21-22. What I'm asking is, what is the closing balance of machinery block?
10,000.
10,000, sure. How did you calculate?
No, I was thinking because
okay, I got it.
as you said,
that's
since
actually,
it's in the beginning of the year.
That's brilliant. Actually, that's a really nice answer. Yeah, absolutely. That is a wrong answer though, but that is an absolutely brilliant answer. Anybody else?
25,000. 15,000 sold value plus 10,000.
25,000. No, 25,000 is incorrect. Now, what Max said was actually logical. If you think about it, machinery 2 is sold, right? Machinery 2 is sold, which was 20,000. Now that is not existing at all. Why would you even take that cost? Now we only have machinery 1. The cost for that was 10,000. Makes sense, right?
Correct.
Yeah. Now here comes the logic of block of assets. What they say is we do not recognize individual assets. What they say is we do not recognize individual assets. Block of assets is the total, that is 30,000. Any machinery you sold in between, we don't care about it. You deduct that from your block of assets value. So your final balance would be 30,000 minus 15,000 is equal to 15,000. Makes sense? This is an additional thing I'm just telling. What I told was, in the concept of block of assets, the individuality of the machinery, individuality of the assets goes off. You look at the block of assets as a whole. You don't take the individual assets values into consideration. Make sense? Any questions on that?
Dheeraj, could you just repeat that?
Yeah. So what I'm saying is, when we have machinery 1 and 2, 10,000, 20,000, the total is 30,000. You sold only machinery 2 for 15,000. You will not look at the individual asset value, that is machinery 2 was 20,000 and 15,000. So only machinery 1 is there. Individuality of the machines, individuality of the assets are gone. Only the block you will see. Your block was 30,000. Out of the block, you have sold 15,000. Your closing value, closing balance is 15,000. That is the approach of income tax. Completely different from how we do in accounts.
Okay, got it.
Yeah. Now that we have understood that, let me change one data. Okay. This is here 35,000. Question is exactly same. Machinery 1 you had 10,000, machinery 2 you had 20,000. You sold only machinery 2. But for how much? 35,000. Tell me what is the closing balance of the machine block?
$30,000 minus 35,000.
So are you saying your machinery block is minus 5,000?
Yes, because you said, right, we are taking it as a block. We are not taking it as an individual machinery.
No, I understood the logic, but try to think it further. Can the closing balance be negative?
No, it can't be.
Then
It
what
should
is the
always-
case here?
Is there any buffer, like a buffer amount from where we are like fetching this?
No. What does this mean? Can somebody relate it to something? What does this mean?
Over budgeting.
In terms of income tax, I mean, I got a concept. Yeah, in terms of income tax.
Is it profit?
So yes, this is profit. Then in that case, what is happening then?
So the machinery amount increases, right?
Yeah, for sure. No, in terms of income tax, if it is a profit, there will be a tax on it, right?
Yeah.
Then are we going to include this profit in our PGBP, profits and gains from business and profession?
Business and profession means this is a part of business, right? So of course we have to include it.
Any other opinion other than that?
Anything which is like fetched from acquired from business, right? Whether it's a profit or loss, it has to be like attracted.
Okay. Let me introduce one thing. I don't think I have discussed this earlier ever. We have 5 heads, right? One is salary, one is house property, one is business and profession, one is capital gains, another one is other sources. Yes. We have already discussed about salary because anything related to salary is covered there. House property is where you have a house property, residential house property, which you are giving as a rent. That's when the house property comes into picture. Business and profession is when you have a business or profession, as the case may be. Then what is capital gains? Can somebody tell what is capital gains?
Gaining of capital.
Gaining of capital. What do you mean by capital here? Do you mean shares?
Working capital.
Yeah, no, that is not it. That is not it. Anybody else? Okay, so capital gains is when you are selling assets for profit. Be it a land, be it a building, be it any other asset for that matter. So there is a separate definition for capital assets. When the asset is a capital asset and you are selling it and you are making a profit on it, that's where the capital gains comes into picture. Now that I have told the concept, let me ask you the important question. Machinery you had for business and profession. You are charging depreciation to the business. You are selling that machinery. You are making some profit on it. Is this a Pgbp income, profits and gains of business and profession income, or is it a capital gains income? Which head should be charged?
Capital gain.
Yeah, that is correct. Anybody else? Any doubts on that? If somebody feels that it should be actually Pgbp, anybody?
Dheeraj, you mentioned like all your plant and machinery, computer books, everything will be included in Pgbp, right?
Yeah.
So this is like this amount, whatever we are gaining, though it's a capital gain, but still it is tagged with the help of a machinery sold, right?
Yeah.
So why can't it be tagged under Pgbp? Why it's been tagged as?
Yeah. I was expecting that question. That's a good question. The reason is, Pgbp is where is basically for the income that you are earning from the business. When you are talking about the business, what is business? What is the business of a particular entity, be it an individual, sole proprietor, be it a partnership? That will be operations. And I mean, if a company is into softwares, any income from the softwares, that will be income for it. But if the company is into software, but it is selling an asset, but it is selling an asset, just circumstantial sell. It's not a regular sell. It's not its core business. Selling asset is not its core business. Then whatever income it makes from that is not a business and profession, isn't it? Income from business and profession.
Okay, got it.
Makes sense, right? So that is why it should be charged to the other head, capital gains. Now, any questions on that?
But it has to be mentioned, right? Like in first time we had learned, right? If specifically if that person is into furniture business,
Yeah.
and if he's selling like furniture, then it's his professional business. If he's buying a car which is like for his self use, but that is not like, and he has extracted the amount from his business.
Correct.
So it doesn't mean like it's something like he has used for his official purpose. It has been used for personal thing.
No, the
So
logic that you are reminding us was specifically about the purchase account and assets account. If you remember,
correct.
while entering the journal entries, we were confused sometimes about, so when should it be purchase account? When should it be as particular asset account?
Correct.
So that's where the logic that you gave was actually relevant. Yeah. So this is slightly different from that, but somewhat similar. So yeah. Yeah. Any other questions? Okay. Now, one important thing I wanted a question on that. So if you didn't ask, then let me ask you. What about machinery one? So basically what we are saying here is that we have sold the whole block and we have made profit of 5,000 on it. Then what about the machine one? Are you getting my question? Understanding the question is very important here. What I'm saying is, you had machinery one, you had machinery two, 10,000 and 20,000. You sold only machinery two for 35,000. Now you're saying you made a profit of 5,000. How did you calculate 5,000? You deducted 35,000. You deducted 30,000 from 35,000. 30,000 was the total of machinery one and two. Meaning thereby you are saying the whole block is sold and you made a profit of 5,000 by selling that block. and this profit will be transferred to your capital gains head, where you will be taxed on the 5,000 profit. Now, what about the machinery? You still have the machinery one with you. It is being still used in your factory. What about that?
That is an asset for the company, right?
Yeah. So, but you are saying that your whole block is sold. How come that makes? I mean, how do you understand that?
No, these are just on paper. Like we have to consider the whole block to calculate the value.
Yeah. That is correct.
But
No, I
practically,
just wanted to ask because that doubt should come in your mind. So, because if we are trying to understand the concept of block, these two examples are actually the best examples to understand it. So, here is the example. Even if you have an asset, but you have sold another asset in the block for more amount, then your block will not exist anymore, even if you have the asset with you still, even if you are still using the other asset with you. That is the concept of block. So individuality of the assets goes off. The whole block is seen on a whole. Make sense?
Dheeraj, one question here.
Yeah.
Let's assume like we have at present two machineries, 1 and 2. Okay, 2 has been sold out.
Yeah.
So we bought a machinery 3.
Yeah.
So still we can't recreate the block.
Yeah. So when I'm saying machinery 1 and 2, only these two. If you have a third one, obviously that will have big impact on it. Let me change the data here, as you said. Let's suppose there is a machinery 3 here. Machinery 3 is of 40,000.
No, let's assume it has been purchased after selling a machinery 2. Can
No.
machinery 3?
Let's make it very simple first, then we'll complicate it. Let's make it very simple first, then we'll complicate it. So you have 3 machineries now, 10,000, 20,000, 40,000. You sold only one machinery for 35,000. What will happen now? Will
70,000 minus 70,000 minus 35,000, right?
What is that?
Sum of all machinery 1, 2, 3.
No, that comes to 35,000, as you said correctly. But what is that 35,000?
The closing balance.
Closing balance.
Now, I mean, I haven't told this from the beginning. Why are we calculating the closing balance? Can somebody tell?
No idea.
No, because tax is calculated based on closing balance, right?
No. Look at this. We are calculating depreciation. We have to calculate the closing balance so that we can calculate depreciation on it. We can simply multiply the closing balance multiplied by the rate. Whatever rate is relevant for us. Here in our case is 15%. Make sense?
Okay.
Yeah. Okay. That is the whole logic for which we were calculating the closing balance. Now, just before this, whatever case was there, will there be any depreciation where we were earning profit of 5,000?
No depreciation.
No depreciation.
Because the whole block is gone.
Yes, absolutely correct. Now that we have block, still we have 35,000 balance of the block. That's why we will have depreciation for our block. Make sense?
And also, Dheeraj, you mentioned like we can waive off, right? There is no concept of depreciation here. Like if it is sold also, they'll take the value as the first value, whatever has been bought.
Yeah, so that's what, no, in the earlier example where we were making profit of 5,000 by selling one asset, in that case depreciation will not be there only. That's what we've talked, right? Yeah.
Okay.
Nil depreciation. That's what Max also said, that the whole block is missing only. That's why no depreciation. Now let's come to your question. Machinery 3 was not there. It was purchased during the year. Now tell me, what will happen? In between the year, if you have purchased, in the end, it will be there for sure.
Correct.
So you will add it, isn't it?
Right.
You will add it, right?
Right.
The moment you add it, the calculation remains exactly same. In order to calculate the closing balance, when we were selling, we were deducting it, right? If we have purchased, we will add it, right?
Correct.
Yeah. So automatically the calculation remains exactly same. 35,000 will be your balance. Make sense?
Yeah. So I have one more query.
Yeah.
let's assume like machinery 2 has been already sold. So we
Correct.
have a closing balance of 35,000
Correct.
and we purchase machinery 3 for 50,000.
50,000. Okay.
Right.
Mhm.
So now machinery 2 is not there, but machinery 1 is there, still in a block. But it won't be considered as block because we are say like calculating depreciation based on the closing balance and considering as a complete block. So machinery 2 has been sold. So let's
Okay.
assume my question is,
Mhm.
can we tag machinery 3 with machinery 1 as a block? So
Yeah,
machinery 2 has
obviously we
been
can. Let's answer that question by the provision. The provisions that I said was the assets should be this on the same block, number one. Number two is assets should be having same rate of depreciation. Does machine 1 and machine 3, are those two in the same block of asset? Yes, right? Plant and machinery.
right.
Are both having the same rate of depreciation? Yes, right? 15%.
Correct. Correct.
So it will be in the same block.
Correct. So if instead of machinery 3, if they had purchased computer, then the percentage will vary, right? Then it can't be
Yes.
considered as
In
a
that
typical
case, it
block.
will be considered as a separate block only. That's a very
Okay.
good question. Now, let's say we haven't purchased 30,000 machinery. We have purchased a computer for 40,000, suppose. In that case, what will happen is this block, the plant and machinery block or the plant and machinery block will be completely gone because it is completely sold off as per income tax. But there will be another block for computer that will be existing. That you will calculate the depreciation separately on 40,000 at the rate of 40%.
40%.
That is a completely separate block. So this, whatever we are discussing, that is for a particular block only.
Got it.
Yeah. Any other questions?
So Dheeraj, I had a doubt.
Please.
Just imagine we bought a machine when there's only 5 months left in the assessment year.
Okay.
So then the rate of depreciation goes to 7.5, right? So does it come under this block itself or?
One second. I haven't actually discussed the half thing. Okay, but let me introduce that. Then we'll go to your question. Yeah. Yeah. So, any other questions other than that? Okay. Now let's solve one question very quickly. I'll tell you. Suppose you had building. Okay, we have only 1 minute 30 seconds. Let's complete this question, this example only. Then we'll end today. I don't have much time. That is why. Otherwise, I wanted to cover one question from Sir's question bank also. No problem. So we'll connect back very quickly for 10-15 minutes. We'll just complete this one that I'm giving as an example, and we'll wind up for today. Suppose you had building of in the beginning of the year, you had building of 1 lakh, and you had furniture of suppose 50,000. Then you had one intangible asset of suppose 75,000, and you had computer of suppose 45,000, computer 1, and then you had computer 2 of suppose 35,000. So these many assets you had during the year. What happened is you sold computer 1 for how much rupees? Is suppose 80,000. No, not 80,000. 70,000. You sold computer 1 for 70,000. What you need to tell me is what is the depreciation for this year allowable as per income tax. I'll repeat the question.